All, this is your video for the debrief solutions of the third PM quiz. Okay, so let's start working on that. There were 10 questions in this quiz and I will be solving these for you. Have a look. A company makes and sells product X and product Y. Twice as many units of product Y are made and sold as that of product X. Each unit of product X makes a contribution of 10 and each unit of Y makes a contribution of 4. Fixed costs are 90,000. What is the total number of units which must be made and sold to make a profit of 45,000? Okay, the question is how much is the total sale number of units which must be made and sold to make a profit of 45,000? Okay, so let the company make X units of product X. Okay. If you observe, they have written here twice as many units of product Y are made and sold as that of product X. So units sold of product Y will be 2x. Okay. Now, each unit of product X makes a contribution of 10 and each unit of product Y makes a contribution of 4. Here, contribution per unit for product X कितना है एक बार चेक करो. Contribution per unit is 10 for product X and contribution per unit is 4 for product Y. ठीक है. So आपका total contribution will be 10x. यहाँ पे आपका total contribution will be 2x into 4, that is 8x. This will be my total contribution. Okay, x into 10, 2x into 4. Now, all the entire contribution has been expressed in terms of x right now. What is the question? The question is what is the total number of units which must be made and sold to make a profit of 45,000? They haven't said how many units of X and how many units of Y. They have asked you total number of units. Okay, so number of units to achieve desired profit level. How will you get that? That is desired profit plus fixed cost upon desired profit plus fixed cost upon what? This has to be divided by contribution per unit, right? Now here, if you observe carefully, you don't have a typical situation of just one product. You have a situation where you have X units of X and 2X units of Y. Okay, so the question is how do you get contribution per unit? That is the question. Now here total contribution is 10x. Here total contribution is 8x. So 10x plus 8x would be 18. And how many units of X and Y have been made? You have X units of X and 2X units of Y. So if I have to calculate my contribution per unit, don't you think total contribution 18x divided by X plus 2X will give me a contribution of 6 per unit? See, ideally, X and Y will have different contributions as you can see. But we have to calculate break-even ratio and we know that the number of units of Y that are made are 2 times that of X. So we have converted the output of Y in terms of X and we have the value 6 per unit as the contribution per unit. So now number of units to achieve profit of 45,000. ठीक है, is 45,000 plus what is the fixed cost that the business is incurring? Fixed cost is 90,000 upon 6. So you have 1,35,000 divided by 6, which is 22,500. What is 22,500? 22,500 is the total number of units to be made to achieve profit of 45,000 is 22,500, which is option B. Now, if the question would have asked you ki how many units of X or how many units of Y, You know that twice as many units of product Y are made. So units of X will be X and units of Y are 2 times that of X. So this will be 2X. Okay, X plus 2X is 22,500. Okay, X plus 2X is 22,500. So X will be equal to 22,500 upon 3, which is 7,500. So units of X, if somebody asks you, that would be 7,500. Units of Y would be 15,000. Okay. So that they haven't asked this in the question, but I've just given you an additional point. Ki if they do end up asking this in the exam, you know exactly which way you have to go. Okay. Chalo. Let's look at the second one. Betis Limited is considering changing the way it is structured by asking its employed staff to become freelance. Employees are currently paid a fixed salary of 2,40,000 per month, but would instead be paid 200 per working day. On a typical working day, staff can produce 40 units. Other fixed costs are 4 lakh per annum. The selling price of a unit is 60, material cost is 20. What will be the effect of the change of break-even point of the business and the level of operating risk? Now, first thing that you should do is you should calculate. See, they have asked you what will be the change on break-even point, which means you will need current break-even point and you will need the break-even point after these changes have happened. Okay, current break-even point. What is current break-even point? It is fixed cost upon contribution per unit. What is my fixed cost? My fixed cost, if you observe, is 2,40,000 salary plus 4 lakh. Okay. 2,40,000 is salary, which is a fixed cost. Other fixed costs are 4 lakh. And if somebody were to ask me what is my contribution per unit, material is my variable cost, selling price is 60. So this will be 60 minus 20. This will be my contribution per unit. 6,40,000 upon 40 is how much? This is 16,000 units. So I will achieve my break even uh, when I end up producing and selling 16,000 units. Okay. Now, the company wants to change the way it is structured. So employees who are currently paid a fixed salary of 2,40,000 per annum, but would instead be paid 200 per working day. On a typical working day, staff can produce 40 units. Now there is a change that is happening. Okay, now your fixed cost is not going to be 2,40,000 plus 4 lakh. It will only be 4 lakh. Okay, so since all workers will work on per day, the salary cost would be variable. Okay, so only fixed cost we are incurring is how much? Is 4 lakh, which is my other fixed cost. Now observe how many are these workers getting paid per day. So a worker gets 200 per day, and in one day he makes 40 units. Okay, so what is the labor cost per unit? कितना है labor cost per unit? 200 upon 40, which is basically 5. So आपको मिल गया आपका labor cost per unit. Now labor is a variable cost. Okay. So what would be my revised contribution? Revised contribution per unit will be 60 minus 20 minus 5, which is 40 minus 5, that is 35. Okay, 40 minus 5 is 35. So if now I want my new break-even point. Okay, it's the same formula that I have to apply. My fixed cost is 4 lakh. My contribution per unit is 35. How much is my break-even point now? My break-even point is 11,428. Okay, or 11,429 units if I round it up. So break-even point reduces by how much? 16,000 minus 11,429. How much is that? 16,000 minus 11,429, 4,571. The break even reduces by 4,571 units. So that means option A and option D are ruled out. And the break even point reduces by 4,571. Now let's talk about operating gearing. Okay. Operating gearing, one of the formulas to discuss operating gearing is fixed cost upon वेरिएबल कॉस्ट. ठीक है. अब ऑपरेटिंग गियरिंग बिफोर दिस चेंज टेक्स प्लेस. ओके. Operating gearing is fixed cost upon variable cost. If you don't want to apply the formula and do that analysis, something that you can keep in mind is, see, operating gearing is basically a measure of the fixed cost in your overall cost structure. Okay. Now, if you observe, the overall fixed cost is reducing in this case. Correct. Fixed cost is reducing. That means risk is reducing. So operating gearing is reducing. Answer is option B. Operating gearing, there are multiple formulas: fixed cost upon variable cost, change in contribution upon. So there are three different formulas. But basically, what does operating gearing stand for? Operating gearing basically is an indicator of fixed cost in your overall cost structure. So if fixed cost is going down, that means operating gearing is also going down. Therefore, your answer is option B. Okay. If you have any questions, you can let me know in the chat box. I will help you. Now, a company manufactures and sells a single product with a variable cost of 36. It has a contribution to sales ratio of 25. The company has weekly fixed cost of 18,000. What is the weekly break-even point in units? Okay. So, break-even point in units is how much? It is fixed cost upon contribution per unit. Now, what all do you have? You have variable cost of 36 and your CS ratio is 100. CS ratio is contribution upon sales. Less variable cost is contribution. If sales is 100, these are my assumed values. Okay. If my sales is 100, how much is my contribution? CS ratio is 25. That means contribution is 25% of sales. Naturally, the difference is variable cost. Okay. Now let's look at the actual data. The actual data tells me that my variable cost is 36 per unit. If variable cost is 36, can I get my sales? 36 into 100 upon 75, which is 48. Contribution is 12. Okay, this is my actual data. Now, my break-even point would be fixed cost, which is 18,000 upon 12. That would give you an answer of how much? 18,000 upon 12 is 1,500, right? So that is the amount, that is your break-even per week. 1,500 per week. This could be in the exam, they could ask you to punch in the number. So you have to write 1,500 in the box that is given to you. Okay. I hope this is clear. If you have a question, please let me know in the comment section. Now, question number 4. The management accountant of Caroline PLC. No, read the requirement first. By how much will Caroline's break-even point for the next year change as a result of these changes? The management accountant of Caroline PLC has calculated the firm's break-even point from the following data. Okay, so in my current data, I know that contribution is sales minus variable cost. So contribution per unit is selling price 20 minus variable cost 8, that is 12. What are my fixed overheads? My fixed overheads are 79,104. It is now expected that product selling price and variable cost will increase by 8% and 5.2%. My current break even, fixed cost 79,104 upon contribution per unit, which is basically 6,952. After changes, sales कितना हो रहा है? Currently your sales is 20 and the question is saying that selling price is increasing by 8%. So plus 8% and variable cost. Earlier it was 8, now it is 5.2. So 8 plus 5.2% of 8. Okay, you have 8.416. Now, with this information, how much is your contribution? Your contribution is 21 minus 8.416, 13.184. Your fixed cost remains the same. So now your break even is 79,104 upon 13.184, 6,000. So your break even point reduced. Reduced by how much? Earlier it was 6592. Now it is 6,000. It has reduced by 592. So by how much has it changed in the next year? So change percentage is always calculated as change upon original. Okay. So this has fallen by 8.98. If I round it off, I would say it has fallen by 9%. So again, this question required you to be like super careful in terms of how you are approaching the numbers. Okay. So you get your answer as option D. Okay. Chalo. Let's have a look at the next one. Edwards sells two products with selling prices and contribution as follows. Selling price per unit hai, contribution per unit hai, budgeted sales unit are given to you. Edwards fixed costs are 14 lakh. What is Edwards current break-even revenue to the nearest dollar? This is a question which expects you to calculate break-even revenue and two products are given. Okay. So when you have two products and you need the break-even point in revenue, in terms of revenue, basically what you should calculate is you should calculate the weighted average CS ratio. Okay. So contribution, sales units, F and G. 1,50,000, 1 lakh. Sorry, that is the number of units. What is the contribution? 10 and 4. So total contribution is this much, okay, which is 15 lakh plus 4 lakh. And it is the selling price per unit. Selling price per unit is 40 and 20. So how will I get my total sales? Again, this will be number of units sold into selling price per unit. Okay. Now you know how finicky I am with respect to formatting. If it is not done the right way, something starts happening physically to me. What is my weighted average CS ratio? Weighted average CS ratio is 23.75. Now, if you need the break-even point, fixed cost upon weighted average CS ratio, which is 5,894,737. Okay, this is your answer. Goods are sold in the standard sales mix. That will be your assumption. Okay, cool. This was an easier one. Let's look at the next one. What would be the impact on the break-even revenue if the sales volume of G increases? Edwards sells two products with selling prices and contribution as follows. The data that you had earlier. Edwards fixed costs are 14 lakh. Edwards now anticipates that more customers will buy the cheaper product G and that budgeted sales will be 1,50,000 units for each product. What would be the impact on break-even point or break-even revenue? ठीक है. This is my existing scenario. ठीक है. Existing scenario and what is your break-even revenue? Break-even revenue would be 14 lakhs upon 23.75. Okay. Now, proposed scenario. Proposed scenario, they are saying there will be more sale of the new product G. not new product, of that existing product only, but it is a cheaper variant. Okay, so here instead of 1 lakh, you will now have 1,50,000. Okay, so now what will be my break-even revenue? 14 lakhs divided by 23.33%, 6 lakh. So my break-even revenue now is a higher number. ठीक है, अब my average CS ratio has reduced. What would be the impact on the break-even point if the sales volume of G increases? Increase by the extra revenue from G of 5 lakhs or of 50,000 into 20, 10 lakh. Decrease by the extra revenue from G of 50,000 into 20, that is 10 lakh. Increase by 10 lakh, decrease by 10 lakh. Increase by a different amount, decrease by a different amount. In this case, what has happened to your break-even revenue? Your break-even revenue has increased from 5894 to 6 lakh. So it's not with this amount, it has increased by a different amount. So your correct answer should be option C. Okay, be careful, read the question carefully, put the numbers in place, get the calculations done, and you are on the other side. Okay, let's look at this question now. In relation to this data, which one of the following statements is correct? The margin of safety is 40, contribution to sales ratio is 24. Let's see, the easiest thing is CS ratio. Okay, so what is contribution here? Contribution is sales minus variable cost. 25 is selling price, 5 is material, 7 is labor, and 3 is variable overheads. So 7 plus 3, 10, 10 plus 5, 15, 25 minus 15, that is 10. Okay, and what is my sales? My sales is 25. So CS ratio 10 upon 25, which is 40%. So they have said contribution to sales ratio is this. Sorry, not happening. Margin of safety is 40. The volume of sales needed to make a profit of 270 is 45,000. Okay, now what is my contribution per unit? Contribution per unit is 10. Okay, so when sales of 45,000 units happen, तो क्या होगा? 45,000 number of units sold into 10, which is your uh, contribution minus fixed overheads. Budgeted output 30,000 into 4. So this is 4,50,000 minus 1,20,000. Correct? This will give me 45 minus 12, 3,30,000. So even that thing happens to be incorrect, right? Even this calculation has a problem. It doesn't seem right. The reason I went ahead with B and C is because, I found them easier to calculate. Not that margin of safety is difficult particularly. If budgeted sales increases to 40,000, budgeted profit will increase by 1 lakh. Okay. Profit when 30,000 units are sold. See, यहाँ पे 30,000 units is budgeted output and profit per unit is 6. So this into 6 is 1,80,000. See, fixed overhead 4 means OAR is 4. How is OAR calculated? OAR is budgeted overheads upon budgeted output. 4 equal to budgeted overheads upon budgeted output, which is 30. So budgeted overheads will be 30,000 into 4. ठीक है, अब when आउटपुट इज 40,000, ठीक है, अब आपका कंट्रीब्यूशन विल बी हाउ मच? कंट्रीब्यूशन विल बी 40,000 into 10, that is 4 lakh. Okay, fixed cost is 1,20,000. That doesn't change because that was already made, and now you have a new budgeted output here. So profit will be 4 lakh minus 1,20,000, which is 2,80,000. If budgeted sales increases to 40,000, budgeted profit will increase by 1 lakh. Option D is your correct answer. ठीक है? Patience. These are questions that will require patience from you. If inventory levels are negligible, what is the break-even point in units? Break even point is fixed cost upon contribution per unit. Okay, sales revenue 20,000 hai. 5,000 is the sales minus 1,600. Sorry, no, that is again. Let's write down our fixed cost here. Which all fixed costs should you consider? Think about it for a moment. Should you consider the manufacturing and the selling cost, or what all costs should be considered? You should consider all the fixed cost. Okay. So there are manufacturing fixed costs worth how much? Manufacturing fixed costs of 1,600 plus 1, 2, 3 zeros. Then you have selling fixed cost. How much? 1,200. Total fixed cost is 16 lakh plus 12 lakh. Okay. Variable cost. There is manufacturing related variable cost 1,400 plus there is selling related variable cost 400. This is 1,800. Uske upar 1,230. Okay. So what is my contribution? Contribution is sales minus all the variable costs, which is 3,200. So total contribution is 3,200, or and then I need my contribution per unit. Okay, 3,200. This is expressed in thousand. So 123 divided by number of units, which is 20,000. How much will be your contribution per unit? 160. So break even point in units is fixed cost 28 lakhs upon 160, which is 17,500. Your correct answer is option C. Okay, I hope you are with me. If you have any doubts, let me know in the comment section below. Now, P makes two products, P1 and P2, budgeted details of which are given to you. Budgeted production and sales for the year ended 30th November 2005 are product P1 10, product P2 12,500. The fixed overhead costs included in P1 relate to the apportionment of general overhead cost only. However, P2 also includes specific fixed costs totaling 2,500. If only product P1 were to be made, how many units to the nearest unit would need to be sold in order to achieve a profit of 60,500? Okay, this is a peculiar question. Okay, this is a very interesting question. Let's see how this is done. See, what they have asked you is how many units would need to be sold in order to achieve a profit of 60,000. Okay, so number of units to be sold to achieve target profit. This is basically target profit plus fixed cost upon contribution per unit. Okay. Now, what is by our fixed cost? Fixed cost is you are making 10,000 units of P1 and the fixed cost apportioned is 1.20. Then you are making 12,500 units of P2. Fixed cost apportioned is 1. So what does that make our total fixed cost? 10,000 into 1.2 plus 12,500 into 1, 24,500. But they are saying that P2 also includes specific fixed overheads totaling 2,500. So those are only related to that particular department or that particular product. On an organization level, see, when we are trying to do break even, we'll have to consider overall fixed cost, which is common to both the products, which has then been apportioned. So what is fixed cost for BEP purpose, break even purpose के लिए, what is your fixed cost? 24,500 minus 2,500, because it was not incurred for both products in a uniform manner. It was specific to that particular product, that particular department. ठीक है? Your total fixed cost is 22,000. Now the question is, how do you calculate contribution per unit? But look at the actual expectation. If only product P1 were to be made, how many units would need to be sold in order to achieve a profit of 60,000? See, the reason why we subtracted 2,500, we only wanted that fixed cost, which is common to both the products. Because ultimately we want to calculate something with respect to P1, and 2,500 wala jo fixed cost hai, that has not been incurred with respect to P1. Okay, what is the contribution per unit? Contribution per unit for P1, 10 minus direct material 3.5 minus direct labor 1.5 minus 0.6. How much is that? 10 minus 5 is 5. 5 minus 0.6 is 4.40. So your target units, target profit 60,000 plus fixed cost 22,000 divided by 4.4. Let's see if we can get this. 22,000 plus 6,000 upon 4.4. How much is the number coming to? It's coming to 6363. No, sorry, my mistake. Huh? I did 22 plus 6. I should do 22 plus 60. So the answer is 18636.36. That is 18636 units to the nearest unit. So 18636 is your answer. But whenever, see, remember one thing specifically when it comes to break even point, always round up, never round down. In case of BEP units, always round up, never down. Even if it is 636.36, you should make it 637. Okay. So 637 units. Okay. So these are the number of units that you need in order to achieve your break even. Okay. Not break even, sorry, in order to achieve the target profit that you are talking about. Cool. Interesting question, slightly different as compared to what we have seen so far, but a very critical one. Okay, let's talk about the next one, which is Hubbard Limited. Which two of the following about the performance of Hubbard Limited's next month are correct? Hubbard Limited manufactures and sells a single product that has the following cost and selling price structure. Selling price, material, labor, variable overhead, fixed overhead. The fixed overhead absorption rate is based on the normal budgeted capacity of 6200 units per month. So, what are my budgeted overheads? See, my OAR is always budgeted overheads upon budgeted units or budgeted hours or whatever it is. Here my OAR fixed overhead is 22. This is basically budgeted overheads upon budgeted capacity of 6200. So if I have to get my budgeted overheads in place, it is 22 into 6200. Check करो कितना आता है. 1,36,400 is the budgeted overheads. ठीक है. Which two of the following are correct? 1921 units are required to break even next month. What is contribution per unit? If I need break even point, I need contribution per unit. It is 199 selling price minus 54 material, direct material minus 50 direct labor minus 20 variable overheads. So how much will this be? 199 minus 54 minus 50 minus 20. Now, if I need my BEP in units, 1,36,400 upon 75, 1818. Okay. Now, what do you think about this? Naturally, the first statement is not correct. This is not correct. 3152 units are required to achieve a profit of 1 lakh next month. You know the formula. Number of units to achieve a target profit is target profit plus fixed cost upon contribution per unit. Target profit है 1 lakh, fixed cost है 136,400 divided by contribution per unit 75. So how much is that? 236,400 upon 75, 3152. Statement 2 is correct. Monthly fixed costs are 136,400. This is also correct. No need to check the next one. Your job is done. So any question on BEP analysis is usually more focused on numericals, or you could have diagrams also. We'll be covering a separate test on diagrams, just exclusively diagrams. But for now, keep this in mind and work on your BEP, that is break even analysis. If you have any doubts, let me know in the comment section and I will be more than happy to help. Thank you so much.